All right. Good morning, everyone. Happy Monday. As always, we will do a market outlook, and then we will go over some top ideas, and then go, of course, any ideas you guys want to go over, we'll do them as well. So again, starting off last week, and we had this nice little bounce in the SPY. We had a technical bear market, meaning a 20% drop from all-time highs for about one day, about 2 weeks ago, when we were down about 21 to 22%. And since then, we've quickly kind of snapped back off those lows. And, kind of in the big picture, I was, kind of highlighting that, comparing this current bear market to the one that Sheikh pointed out back in 2019, where the trading actually seemed to be very similar. In late 2018, we were running up to new all-time highs. Every day was, kind of a new high. Similar market that we're going into the beginning of this year, brand new highs every single day, or for the most part, pretty much every single day. We broke down off those highs, which again, with every bear market, it's, after a run up, we based out, had a technical bear market, and 4 months later, we were back at all-time highs and the trend continued. Now, the only difference this time is that this bear market has been a little bit longer, where the one in 2018 that chart-wise looks the same, that run up, that base, that push down, chart pattern-wise, it looks very similar. The duration is now different. And even on my end, broadly with a lot of these corrections that we've seen, or crashes, if you're going to call them, you think of the dot-com bubble, from peak to valley, back to the peak was about 5 to 6 years. Financial crisis was about the same, from its peak to its bottom, back to its high. And then with the pandemic, it was 1 month down, and 6 months later, we're back at those highs. So we've seen the broader market crashes, the time frames tighten up broadly, but we're not really. This is just like a bear market. This isn't like a dramatic drop like the pandemic, when it was just aggressive selling for a month straight. Where this is just much slower, like we saw in 2018, 2019, but a little bit longer, where that one was 2 months to the bottom, 4 months back to the high. This has been about 5 months for us to drop 20%. And my thinking is, why can't we be back at highs, by the end of the year? It's not like we're going to get there tomorrow or the next week, but with everyone, or I don't say everyone, with most people looking down as if we're entering a recession and the market has to trade lower. But often the people that say that, when you ask them what's a recession, they can't really explain what it is. So it's just kind of the headline fears of, high interest rates, things like that. But who's to say that we couldn't get back? So that's kind of my thought of, this might be the worst of it. We probably will have to retest this low and maybe even push a little bit lower before we can get that move back to highs. But my thinking is still kind of by end of year, we can kind of get back up near these highs and be in this very big, kind of 20% range. And if we do trade in this 100-point range, in time, eventually that measured move would send us 100 points higher into the 600 area in the SPY. That would be the measured move of this pattern over the next year or two, if we do kind of base out here and not continue to roll over as we have for the past few months. So again, a lot of the sectors this past week have been very strong. It's kind of hard to chase a lot of these sectors up here. I think my computer is running a little slow, so I do apologize if these charts aren't coming up. But again, energy has been very strong, continues to break out. This red line has been this major resistance level that's gone back a couple of years now, and we're finally closing above it. So as long as we're staying above this, 118, 115 area, we probably continue this slow grind or drift higher towards this prior all-time high, going back to 2014. So this would be like a great area for me, like specifically, or for people using M1. Once we get back up here in this 140, 150 area, 130 area, that will more likely be a time that I will personally start to rebalance this position or this sector, because I've been buying it for a very long time. I bought it the whole way down into the pandemic. Can't turn. I don't know why this won't turn. And I've been buying it the whole way up. So this is like my biggest sector, and this is when it does get up here, I'll definitely start to lighten the load and take some profits. Moving on. Again, this computer's not doing
sleeping.
Utilities, again, very strong, continues to kind of just run up back towards those highs. Again, risk off, people are a little fearful. not too surprising. Materials, the industrials have looked phenomenal. Even the materials is, such a huge flag up here. Either again, this is a huge flag or it's a topping pattern that will, the market will kind of dictate what's going to happen with that. But for now, we're in this really big range. And well, a lot of the sectors, even like the materials, it's tough to do anything dead smack in the middle of the range. You really have no advantage here. It's, if you're buying up off support, you have, great risk reward. Buying up to the resistance break, you're buying with the broader trend, but dead smack in the middle, it's kind of just no man's land. It's just kind of going to be a chop fest. And this is where, for a lot of the names this past week, that I moved a lot of them down into like this weak category, which are not technically weak. It's just that where they are chart wise, it's hard to kind of chase these. It's hard to add through NASDAQ through 13,000 when it was at 11.5, 2 weeks ago. It's hard to buy the discretionaries after they just bounce, 40 points off their low. And it's kind of the repeating theme with a lot of these sectors. It's very hard to buy financials into the retest of its prior pivot high when it's in this 10% range. So I think we have to be very patient this week. I think if you have really good stock from the last week or the week prior, this could be a time to maybe take some profits or raise some stops. But it's going to be very hard to try to initiate positions, I think, just broadly speaking, when we've had this pretty sharp snapback off lows, and it's hard to kind of chase the up move that we've already had until we get that kind of next leg higher. And then again, lastly, biotechs and telecom have just been super dead lately, and I would just try to avoid those at all costs because they're just very obviously in this breakdown stage, and there's no reason to try to catch the bottom just yet. Moving on to a couple ideas, some of them are a little contrarian to the ones that I typically would look at, but this BMY was one that I know Heaven was talking about in this very nice, flag here. Again, last week it wasn't really ready to break that 78, which was fine. It came right back, still in this nice little range where we can look to have like a little feeler position after 76, and then eventually after 78. But knowing that if it doesn't break 78 with momentum or with some strength, you want to immediately look for the exit because this just as well could be, like a topping pattern up here, given the run up it's had. The CHRW, same thing. This nice blue sky breakout up to this 112 versus 100, still, big 10% range up here. Probably not going to go anytime soon, but definitely want to keep on the radar. And two that are kind of not names that I typically would trade, but just starting to see these bases form. This Roblox, again, recent IPO, below IPO, the initial IPO low, so more, really like an avoid broadly. But from a short-term swing trade standpoint, if it was to eventually push this 36, it probably could get, some love. But for now, it is still super wide. Just one that I was just saw charting, and, everyone loved this thing at 140 and everyone hates it now at 36, but nothing really has changed that dramatically about the company other than the price action. And this Facebook, obviously it's one way more than Roblox, as most of us are all using Facebook still. But we had 2 bad quarters. It is starting to base now. And again, we'll definitely take a long time to recover before it moves back up to 225 and 250. But down here, through 200.
Abby's currently in a hurricane.
Up to 200 maybe in time could be something that's worth a shot. Given that it hasn't been able to kind of retest this earnings low down here, which we're seeing a little higher pivot low here at Facebook. But so again, nothing really crazy on the radar. BMY and CHRW obviously way better than the Roblox and the Facebook, but just to discuss. I know a lot of guys have traded and girls have traded Roblox up into this move, and now we've kind of forgotten about it. So just figured it was worth mentioning. And lastly, on my end, one just to bring up, I forgot who called this last week, this SMCI. Forgot who it was, but whoever called it 350, that was a phenomenal trade so far. So hopefully someone took advantage of that. So that's my piece for now. I'm done talking. Heaven, if you have any ideas you want to go over.
Yeah, for sure. So that RBLX and Facebook, would you say that those are more like you're looking for long-term trades or swings?
Definitely keeping a closer eye on it. I think if you're using M1 and you've been buying either of these two already, and you're obviously down significantly from a percentage standpoint, if you have profitable positions in M1 at the moment and you're wondering where to rebalance, these two could be spots to increase the allocation if you've already been buying them. Me personally, am I going to buy Roblox? Absolutely not. Will I swing trade Roblox? Yes, but I have no conviction in the company long term. I just, you know, I get the toy aspect, I get their game, it's amazing, but like I personally won't use it. So I don't, for me, I don't believe in the long term. From a swing trading standpoint, through 36, if I could buy 36 versus like if it sets up versus 34, yeah, I'll definitely take it. Am I going to trade it versus 26? No shot. Facebook, I could see both sides of it because again, you know, we spent even for trading, we run Facebook ads and Instagram ads, so Facebook's obviously making money off of us. But this is another one. If you've already been buying Facebook, you kind of got trapped in this gap down. It's been kind of crappy. This would be the time again if you had a winner to take some profits in it and add back to this one, because if and when Facebook does get back to its high, the stock that you're buying down here is going to be worth nearly 100% more. And that may take a year, it may take 2 years. You know, this could take a long time to get back up to here. But just like any stock, you know, any stock can have these periods when they get beat up. And, you know, with these strong companies, they eventually work their way higher. And Facebook, you know, obviously is not going anywhere anytime soon. So this would be more, if you're in an M1, could add to it. For me, for both, probably would just be like shorter term swings if I can get into them with tighter stops again. I'm not going to give Facebook 35 points, and I'm sure as hell not going to give Roblox $10. But just two bases, two kind of out of favor, kind of contrarian names right now that I thought were kind of relevant to bring up, other than the obvious top right bull flag breakouts that we are known to look for.
Yeah, I'm surprised you're looking to swing these. I'm not gonna lie, but we'll see how those go.
I was a little surprised too, but I was like, let me change up a little bit. So
yeah, so I got a few names. First one is ADI through 170. I was already looking at it. Shoulders to this 170 area. Really nice base over the last several months, basically since the beginning of this year. Another one I'm looking at is this AEP utilities name. So in that strong sector, I was actually looking at this one, I think 2 weeks ago, through that like 101 area while it was kind of basing. Highs with a really nice shakeout last Thursday, which probably pushed a lot of people out. People probably want to get back in this one if it starts to push up higher. So I'm looking at this one through 104. I was looking at CELH. Somebody put this one on my radar, I think like 2 weeks ago or a week ago, Alec, I think. Celsius, CELH, not CLH. I can't hear you, you're muted. I can see you talking.
Yeah, but no, it's brackets. I muted myself. Sorry.
CELH, Celsius Holdings.
My bad.
Yeah.
Okay.
All right. So this one was put on my radar last week. I think Alec was looking to buy it through 60. I didn't love it. It is the 200. It's finally like it's flagging right there at the 200 day. So that's kind of given me a visual representation of the trend really starting to change there. So I think there's an opportunity there to buy maybe through 70, 71 area. It's still kind of wide with a stop under 65, but willing to go kind of light on it and see where it goes from here if this is just the beginning of the trend. Another one I know that a couple people are watching is this LRN. Another one that I saw that massive breakout from last week or 2 weeks ago. And yeah, so the risk reward is definitely there. And then we have some member ideas. So Joe was looking at TMO through 573.50.
$570.
Yeah, basically above that recent pivot high. Had an inside day Friday, sitting kind of right above all the moving averages other than the 200-day, which is, for me, that's more hands-off. I'm not a big fan of trading things under the 200, but could definitely see that developing a little bit more and then getting back over that trend line. Next one he's actually also looking at ADI 170 and then LTHM 20. Yeah, that was the one that I also pulled up, but LTHM.
Oh,
yeah.
Come on, computer. Okay, here we go. Up through what, 29?
Yeah, 29.50, 30 area.
Like it.
Yeah, I'd like to see this one maybe consolidate a bit more here because I don't think it'll just kind of V-bottom bounce back to that 34 area. But if it could continue to go sideways, hold up, really show us that support is there, and then buy on the way up, looks pretty.
Yeah, especially with these recent IPOs. This is like that. We see this all the time. It's like that initial, everyone loves the IPO, thing gets smoked. You can even think of like kind of Bumble right now, similar chart, recent IPO. I need some better Wi-Fi. It's killing it. It's like initially comes out, gets smoked for a while, and then eventually, works its way back to those IPO highs, and then back up through and off to the races. And that's very similar to this LTMH. Comes out, gets smoked for 2 years, works its way back to highs, currently off to the races. And this is that like when I'm comparing to Bumble, Bumble's still kind of like somewhere in here. Probably still has to go a little bit lower, and then eventually works its way back to those highs. Oh my God, come on. Guys, sorry about my computer being really bad today. But yeah, eventually works its way back to highs. Like for me, when Bumble gets back to that retest and take some profits and then consider re-adding. But this one again, path of least resistance seems to be higher. We're seeing these very clear bases forming, and then it breaks out and pushes higher. And like you said, Evan, this probably needs to come down, down a little bit more. Probably got to shake out this 26. Again, from a swing trading standpoint, we always want them to go immediately, and we expect them to go much sooner than they have to go. But in reality, they often have to see kind of some lower prices in the short term before they can kind of make a little that U back towards that break area. So definitely one, I'm going to keep like an alert on this. This area, because this is one of those trades that it's not going to be as like tied to the market, given that it's more recent IPO, that it's going to kind of do more of its own thing. Then markets getting smoked, it's going to get smoked. So definitely.
Yeah. Okay, next one. Eric's looking at HWM through 37. I know he's been buying this one since last week. He had some through 36, which was a really nice entry. He wants to be buying through 37. It looks like it's actually gapping up above that 37. Personally, this would kind of be the spot that I would, if I was buying. Versus trying to add, especially in this environment, just because, a lot of things haven't had a ton of follow through. So coming up to this major resistance, I would keep some to see if it does break right through, but I would expect some consolidation or some selling there when it gets to 37. So I don't really want to get in right when it gets back to 37. I'd rather see it flag at 37 and then look to add through that consolidation.
Yeah, I was welcome with the 100%. I was going to say the same thing. Like I would not be adding to this. What you got right now.
Then we've got a few from Abby, but her top three. First one is HD, Home Depot, through 308.50.
Yeah. So like this Home Depot's all like this also reminds me, maybe not as much of Facebook, but these are the names where it's like if you liked Home Depot and you were buying it like down, like these are the times where like when it does start to base down here, you can get some good stock. And again, this eventual move back to highs, 100 points higher, 30% move. It's a lot of potential upside. And smokes 280, things going to be dead. But again, very strong name, big leader.
Yeah, I would say it needs a few more weeks or maybe months to really base out sideways to really digest that down.
Yeah, I just remember Abby mentioned that Humana, And I was like, no, wait on it. And
Yeah,
exactly.
exactly. So that's why Abby knows her thing. So
Yeah,
she
exactly.
knows how to get in. I can definitely see the potential there. But again, under the 200-day moving average, I'm not expecting this to go straight from 308 to 420 in the next month. But it looks solid for a short-term swing trade. Next one she's looking at is CTAS.
So this was like Abby's Humana call.
Yeah.
But again, I'm sorry, what was it? The one you mentioned?
Yes. CTAS 398.
TS.
CTAS.
Oh, CTAS. Okay. What was the setup?
It's through 398.
Nah, this you gotta, this is like
So this is exactly what you were saying, that it's in the middle of the range where we really don't have much of an edge because the stock made a huge move off of lows, and it is giving tough to take a trade here. And also the other thing I would want to add is when it's these expensive names, I would just keep it clean and keep it with an entry over 400. Even though I personally wouldn't take this, but the way that I look at it is like, because it's so expensive, give it that extra $2 to have that, whole figure psychological number. I think makes more sense just entry wise. But yeah, I think this one gets back to resistance. I think you'll get a much better risk reward trade there.
Yeah, I think looking at it, it's like like this setup. It's like you're seeing what happened here, and you're like, well, last time it got up here at 400, it went 10% to 440. But now that like you're looking at that, everyone else is also looking at that same thing. But then what happens is this ran up to 440, like was running up to 440, and people started to chisel that area and whatever that was the high. Well, now that people know this, they're going to do the same thing again. So they're not going to wait for 440 again. The sellers are going to start coming in here at 420.
Yeah.
And that's where we get lower highs because you're trying to get out of the party before everyone else. And then that's, kind of lower highs. So that's where you can't really expect, when you see this, you can't expect that again to happen exactly the same. And when it looks like this, it looks identical, like this bottom half portion looks like twin brothers or sisters. It's not going to get that same love back to this area because people are going to start to cheat it, and then they're going to start, you only get that 20-point move when you're giving it a ton of real room. So this one's probably just a pass.
Yeah. Next one's APD through 254.50. Yeah.
And this is, again, the overall theme is we had this, the last week or two, this big kind of run up off lows. And if this pulls in halfway, 50% retracement off from this, 220 to 250, and then works its way back to this area in time, I think for sure that this is like a phenomenal base to buy through. But I don't think it's going to be one that you're going to want to buy it like today or tomorrow.
Yeah, it needs a couple more attempts and some sideways, and then we'll see how that earnings is later this month, I believe.
Yeah, I'm trying to draw like the little pull in, kind of starts to consolidate and work its way up, and then like this is the time when it rockets through and it starts that move back, that slow few month move back to those highs.
Yeah, she's got a few more, but let's try to get some other ones in here. ATKR from Alex. He's looking at ATKR through 117. I think you'd be chasing here. Well, you did mention that you want to see it tighten up, so yeah, I would agree. Definitely want to.
I remember Alex Smith mentioned this one a few weeks ago when after that earnings. But yeah, same thing. This is very hard. I wouldn't be too surprised if it ticks this 120 today. But again, it's very hard to buy it when a week ago it was at 95. So
yeah,
that is going to go without us.
He's also looking at AVT through 48.
Again, top right, very strong, but little Mickey Mouse-ish flag up here. It's like that immediate momentum. Like if you're buying 49 versus 47.5, but it's low probability that this is gonna that this low is gonna really help. This is really the out here, and it's tough to buy.
Yeah.
Tough to buy it versus this area right now. If this pulls in, eventually through that area 100%. I think right now these are like this one and the CTSH. These are like those chase ideas. Even this ATKR. These are the ideas that we want to avoid. They look great chart wise, but execution wise, it'll be very difficult because the market has had this bounce that we kind of need to pull back into it. We're not going to really just continue like. We're not going to get a move like this that it's just going to keep going up every day. We need like those rug pulls, we need those shakeouts, we need those higher lows to work back higher. And with a lot of these charts, they're just too extended in the short term to rush in them, even though broadly they're very good levels, like this ATKR, phenomenal level. AVT is just new all-time high. So again,
no, it's not actually. If you zoom out, so what I'm just saying is AVT. That's actually a major level on the weekly. So, but it still needs time at this level before we can do anything with it. Yeah. So massive macro level definitely, but needs.
Yeah.
Sort of in an ascending channel, and you don't want to be buying the resistance on those. You want to be buying off support.
Mm-hmm.
Reynaldo's looking at OKE through 68.
OKE.
Yeah, this one's on the shakedown, I think also. This one looks pretty solid. I like this little inverse head and shoulders, just sort of basing after making new highs a few weeks ago.
Yeah, I mean, energy is the leader now. It will be the leader for the foreseeable future, pretty much until we retest that, whatever the 2014 highs in BDE. Energy seems to be the leader. So focusing on this space seems to be kind of the move until we get to there. Energy leads, and OKE again looks great. Eventually, you get that move probably back to this retest and then through that high in time. But for now, just taking it kind of day by day. This is that retest, attempts it again. Even though this is still not that long of a base, like in terms of the length of time it's been basing for, the fact that it's had these attempts is what we want to see. We can see that it's, attempt here again. And all the while we're seeing this, this is the low of the first pull in, this is the higher low, and now we're seeing another higher low. So we're seeing the buyer step up. We're seeing the sellers kind of hold this line here at 68. This is probably, I think, the best idea mentioned so far among all the ideas, that it's the most actionable today. And the market's open. And you guys have to get off this, I understand. I'm not doing anything at 9:30 anyway. So
yeah, we're here, we're chilling.
But this seems like the most actionable trade right now on the tightest risk. Like I would be giving this first prior low a day. And if it really wants to break today, amazing. If not, I take the paper cut and just not think twice about it and be ready to get into it the next time it's ready. But yeah.
Next one, Alex is looking at box through 2750/28.
Let's see. Box, you said box 28?
2750/28, yeah. So I think this one I wanted to see it base more like that OKE that we were just looking at,
Yeah. I think this one you just wait for 28. I don't think you really need to get in 27. Yeah. Not that significant, especially with these. I'm not going to say OK box is a cheap name because it's still kind of in that $30 price point, which is kind of like the floor of names you want to look at. But I don't think you need to rush in for 50 cents underneath that figure when the real out is $4 lower, and that's going to be 20% worth of real room that seems going to trade in. But again, IPO gets destroyed. Back to IPO highs, path with least resistance higher. Very similar, similar things we see with a lot of these IPOs. So again, up here, it's unfortunate it's not kind of battling with this all-time high area. It would look much better. But for here, if you can buy up to 28 in time, then definitely can see what he's looking at there.
Through 71.5.
What was the ticker? I didn't hear
you. CMS Energy Corp. Yep.
This is one I would just wait. I would just be waiting to buy that blue sky, the breakout through 74 in time. I don't think you really need to. You buy 72. Best case, you're going to move 74. You're getting $2. It's your upside's kind of limited here. Again, you can keep it tight, dollar risk, but you're kind of 2 to 1 here. I would just wait.
Yeah. Yep. Abby's got a few other ones that she had on her list. If you want to go over those before time runs out, I got like 8 minutes. She's looking at SNA 221.
221. I would just wait for this 224.
Yeah. Something to keep in mind also, the average volume is it's like less than 300K, which I don't know if you.
Yeah. Big base, but I would wait for really not even 224.
It's like 230 area is kind of where, yeah.
This is what, again, light volume. This is a big ass base. Been since last summer. It's been a year-long base. So a year-long base, again, the longer that these patterns develop, typically the breakouts typically coincide with that. If you have even for a bull flag, a week-long bull flag, you often get a week up move. A year-long bull flag, you often can get 3, 4, 5, 6 months of an up move. So it's been a year-long base. Thing's not going to break out of this thing tomorrow. Just be aware of that. And then when it does, when it does finally start to push through this, it probably is moving out of that trend and will take some time. So it's not one you need to be too early to. It's probably often easier, even wait till after earnings are out of the way. Maybe that's the catalyst that can finally get this thing out of the base, because this last earnings definitely ran it up, pushed it through, but again, maybe it just wasn't really ready yet.
Yeah. Next one.
I did not hear it.
ANTM.
ANTM.
Yeah, Anthem Inc. Through 495, 496. So I guess more of a support buy. Doji inside day at support. I could see the low risk trade there. Looks like it kind of gapped up above the edge.
Yeah. It's already trade. If he's in it, prior low a day, you probably get, some type of move back into this like 515 area for a little support buyback. But now it's like you kind of missed it. Like I'm not going to buy 500 versus 485 for this move. But if he's already in it, then it looks definitely. I definitely see this is like those buys where it pulls back in, buying back up. I think those are great. I think the ones where it's like the chase, the AVT, like this one, like market's open. This is you're selling here. You're not trying to buy this right now. This is like profit taking. Let's see. Anything else?
Next, LRCX 524.
LRCX. Well, 524.
Yeah.
No, so again, market's open, so we're adaptive above it, but I don't really see. I'm not sure. I don't see it. I don't see the setup. So let me just say
Home Depot. It's a little similar to Home Depot, but I think overall it's like still in this downtrend, well below the 200-day moving average. You don't really want to get caught in these like choppy areas. I think you're much better off waiting, having like a clear base, a clear resistance to buy through, instead of like getting stuck in a choppy range where it's like trying to find its footing.
Yeah. And some things are just a pass. Like it's like if just because and for anyone, it's like if you mention a stock and then you don't like how it's setting up, there's nothing wrong with just being like for me, it's like there's nothing here I see that like I would put any money like risk on it. There's nothing against whoever mentioned it. Just I don't see the setup and it's on to the next one.
Yeah. Another one we've got is LMT 445.
LMT. A lot of these defense names have been holding up very well. LMT, C. NOC is looking great. So again, still just kind of flagging here. This is kind of one where it's again either this is a big flag or this is again that topping pattern that just starts to roll over. Time will kind of dictate that. But entry wise, kind of got it seems like this like 455 area, 450. But for now, like for me, it's just kind of just fiddling around in this little range. But it's just, like the reason why I'm like a little more hesitant is that like I need like a vertical line. Hold on. All right, so this left-hand side, like this part of the flag, you're seeing way more buying, like just broad buyers in general. Like most of these candles are green, as simple as we can keep this. And lately, a lot of these candles are red. And as simple as I'm trying to explain this, people are buying it. Now people are not buying it as much. So that's my only hesitation, is that like up until this point, look phenomenal, run up, super strong, great. Now a little bit more selling. And this kind of reminds me a little bit like the Etsy's, the Shopify's, CRMs, a lot of the names that I was buying earlier this year that all got pretty smoked. And it was kind of the same thing. It looked amazing, looked perfect. And then like you start to see more of these red candles, and it still looked okay. And you could figure out, okay, I'll buy after 250, I'll buy after these areas, but then you never get those opportunities, and then the thing gets whacked. So do I think that's going to happen with LMT? I don't know. But down through 420, if that is the case, it's probably back down to this 320 in time, like those other names that have ran up to those major areas. Looked perfect, looked amazing. Everything was behind them. You have this war in Ukraine. You have these issues that can keep these stocks held up higher. But maybe if that war does kind of end, and it's not really the news that much anymore, and that war trade is kind of over, maybe this thing does kind of roll over and does similar things to some of the other names we saw earlier this year that were leaders and then quickly weren't. So again, we got like a minute left, so I'm going to stop it here. Again, I don't know if you guys can see, I'm obviously still rocking our TE watch more than my real Rolex. Got the little watch case here. Again, as objective and unbiased as I can be, these things actually did come out really well. We've so far, Heaven and myself have pre-sold about 31% of the 100 watches that we have ordered. We will be getting those in hopefully by September. So if any of you guys would like to get on the pre-order list, if you're not on it already, we are offering, I'm just putting this watch back in its case, $250 off of the watch. The watch and the watch kits will be $500 once we get them. Right now, we do need some help with reviews for the books. A lot of you guys have been very helpful so far. We got like 25 reviews on each of the 3 books, which has been amazing. And if anyone does want the watch and wants to save $250, just let me or Heaven know. We'll send you the link to order the books. It costs like $8. So it's like, I think it's like a 20-1 or 20-1 trade that you order the books, give us the reviews, and in exchange, we'll knock half the price off on this very nice watch that will have the trading expert's name on it and some funny little engravings on the inside, and they'll all be numbered. And that's that. So again, thank you guys. I know this one's a little bit longer, but you guys have some good ideas.